Thank you, Angel, and Heidi ho, everyone. Welcome aboard. It is a brand new week, beginning the 10th of May. May, hey, that scurrilous month known as May. Sell in May and stay away. Is it going to happen? Well, I don't know. I've got no idea. I'm not a seer of sights ahead. It's not what I meant to say at all, really. But yeah, interesting conversations, I'm sure, in the next few days as we look towards the end of this week, and of course that prediction from one of our new crew, Gordon, who was suggesting that we've got an issue coming up on the 14th or thereabouts. Hi, Paul P. How are we doing? Hello, everyone. Welcome aboard. It's great to have you wherever you may be in God's green garden this Monday evening, afternoon, morning, wherever you may be. Ash, of course, will be joining me very, very shortly. And I had a bit of, well, it wasn't a pleasant week off. It was a little bit of family business, to be honest, last week, and didn't spend too much time in front of the charts. One thing that I did note, of course, as we all have, on Friday, we had what used to be known as the NFP, non-farm payroll number, came out. Not only the non-farm payroll number, there was a fair bit going on there. Before I get to that, I'm going to briefly, and I will share my screen, I'm going to briefly look at the pound US dollar, just in case we wanted to trade a breakout today, which of course we do not, because we've already had a breakout. And there it was, the NFP number of which I spoke, and the market didn't like that from a US dollar perspective, and that's understandable given the print that we got. And of course, ever since, we've seen just about every currency rally against the dollar. That provides us with a very, very interesting scenario coming up to the 14th, which of course is Friday. Must be Friday. Interesting. Be an interesting weekend. And I'm going to be very, very cautious of staying in trades over the next weekend, given what may well or may not happen. We don't know. Speculation, of course, based on sound principles, I must add. And if you're asking me to rubber stamp those, I'm asking the wrong bloke. I'm a currency trader, right? I don't know a jack about the stock market and what it's likely to do, but I do respect other people's opinions, and of course we do have a renowned expert on those matters. So the pound US dollar trade is not going to take place today. I'm not going to trade a breakout, because there it is. What I will be looking for, however, is tomorrow, if this candle is as is, or looks exactly as it is at the moment, I may well be looking to place a trade underneath it short. I'll explain that a little bit later as well. But that would constitute for me a positional trade based on the 14th of May. Because despite what I'm saying, that I don't know anything about it, I most certainly will defer to Gordon's opinion. And if I can take advantage of that, and I want to discuss that actually, when Ash comes into the room, I'll discuss exactly how I'm going to position myself for that in case it does happen. It won't have anything to do with equities or anything other than currency, but there'll be a way, in my humble opinion, to trade that potential. If I see, maybe even if I don't see a setup, I might take a position based on recent support and resistance swings, etc., etc. Okay, to start off my week, as usual, I always look at key reversal bars on the weekly chart. And this week I found a very common theme based primarily on the NFP number. I'm going to stop calling it NFP because it's not NFP anymore. But yeah, I thought there was a definite or discoupling, I suppose, with what I'm normally looking for and what actually occurred. Here are the ones that the scanner threw up for us. Let's go through them very, very quickly. I won't spend any time on them because I haven't traded any one of them. And I'll go through the reasons for that. Key reversal bar, reminding you that a key reversal bar for me is a candle or bar whose low, if we're going in this direction, whose low is lower than the previous bar and closes on or near its high. That is a spinning top, and by definition, it hasn't closed on or near its high, so I dismissed it straight away on Aussie Cad. Aussie Swissy, exactly the same, a spinning top, so no for me. Aussie Dollar, completely different, of course. And I suppose in many ways you could think, okay, that's a very strong bar. Let's just jump in and go long Aussie Dollar. Yes, we've got a low lower than the previous bar. Yes, we've got a close on or near its high. But we are also at a resistance level. This is also an emotive move, in my humble opinion. You've just got to go back to the day chart to find that out. Yes, we were on a rally, but this really put the icing on the cake, did it not? Perhaps they were buying into that announcement anyway. So I believe this is an emotive move rather than a stock standard buying session. And for that reason, I'm going to let this settle down. I do believe that we'll get some consolidation here. We may take out this high, and I'm going to go on with that theme very, very shortly. And that theme, I believe, is going to be based, and I think you're going to hear this all week, not just from me, because it is an inflection, if you like. If the stock market does move as predicted, then so will all these currencies. We'll go with them. And I, rather than ignore that or trade against that, then I think I'm going to position myself to take advantage of that if it does take place. I won't simply be just going into the market, however, willy-nilly, based on, okay, 14th of May, we're going to drop. Because, as I said, it's going to be over the weekend. If it doesn't, well, certainly our time, it's going to be over the weekend. And I don't really want to be in the market at that time unless I'm completely safe. So I believe that those positions that I'm going to take will be well ahead of time. In other words, today, tomorrow, Wednesday, or Thursday, maybe even into Friday. But I'd be getting myself safe in the market before that happens. But my analysis is based around that theme, if you like. But I'll certainly be looking at the chart patterns I normally do. So in this case, this may well turn into a bull trap. And what I mean by that, if you don't know what I'm talking about, is this may well take out the highs here, only to just disappear very, very quickly. I don't necessarily think we'll take that high out, to be honest, but, you know, stranger things have happened. But I can't go long here on Aussie dollar. I'm spending too much time on that. So I said I'd be quick. Euro US dollar is exactly the same. So I'm not willing to go long here at this point, looking for consolidation or retracement. Pound Kiwi, as you know, those of you who've been here for a long time, I'm very, very patient on this pair and still looking to buy it. To my mind, we're probably coming down here before I look to buy it again. But in this case, we don't have a buy signal, that's for sure. Big sell signal, in fact, but look at the level we're trading at. You know, it's former resistance through here, it's support through here, it's a potential higher low based on that double bottom and this level through here. Yeah, I can take profit before there, that's very true. But it's also got a black body and it's a very, very clear reversal bar. If it had a white body, then maybe I would consider it, but that's not a trade for me. And as you can see at the moment, we're having a very, very strong day for the pound at this point in time. That bar there is far more interesting to me, but look at the level you're entering the market at. It's just a no-go zone for me. So that will be that. Next one I want to have a look at is Kiwi Cad. Kiwi Cad, again, we got a spinning top bar there, so it's a no for me. Kiwi Swissy, exactly the same. Kiwi US dollar, similar to the Aussie, a very, very strong key reversal bar, but trading into that resistance level on an emotive move, no for me. Dollar Yen. Dollar Yen, we were fortunate enough to get into this trade on Friday. We were in the trade on Thursday, of course. We were at risk, and to be absolutely frank with you, we got lucky. We got lucky because the dollar news was SH1T, and for that reason we got a nice follow through TP1. I've got my stops at entry on that, so that can't lose, but it's not in a very strong position either. Actually, I haven't got my stops at entry. I've got them safe, however. Yeah, look, I think same theme, and this looks interesting to me. That theme being that if the market is going to buy/sell into the potential crash on Friday or thereafter, or even maybe there before, then this pair will be one of the very, very interesting ones to watch. Happy to be in it, but I don't want to add to the position. I just want to hang on, like Shukri says, I want to hodl this. We're at a very, very precarious position because I think this will be volatile throughout the week. So I'm anticipating we'll get out of this at break even, but if we get really lucky again and get follow through, then this could be an absolute clanger. US dollar, yen. I'm not of that opinion, and I'll go into that a little bit why. I think the dollar will rally, not for a long period of time, but I think the dollar will rally into the end of the week. We'll see how we go. This is dollar Sing, and the big key reversal bar there is similar to obviously dollar yen, but I still think we're trading at a bad level here if we enter this short, so I wouldn't be looking to do that. However, that said, and similar to all the others, if we get a decent retracement on that move and the setup short, then I'd have to take notice that these bars are pointing in a direction, and I need to be aware and very much willing to trade that. So it's going to be a week of very, very interesting market sentiment, in my humble opinion. The market sentiment appears to have shifted over the weekend, due mainly, I would imagine, to the numbers that came out of the US on Friday. And it'll be interesting to see if that carries through till the end of the week to measure up how exactly we're going to, or the market's going to react to. And Gordon won't be the only one, anticipating a sell-off in the markets. There'll be other people looking at that as well, obviously. And I'm really interested to see how that's going to pan out. But as I said, I've got absolutely no idea how to trade it from a stock market point of view. But the currencies will tend to reflect, if that does occur and the market reacts to that. I think you'll see things like Aussie Yen in particular, because it is a yardstick for the market sentiment. In fact, I'll be looking to sell Aussie Yen into that announcement. I want to get safe in the market around that, by the way. I would also be looking to buy the dollar against things like the Aussie and the Kiwi, because the dollar will rally if the stock market crashes. There's little doubt in my mind about that. And the Swissy I'll be looking at as well against currencies like the Aussie, like the Kiwi. Not so much the CAD. CAD's got a bit of a piggyback on oil at the moment, and I think that's probably an interesting play as well. If you want to play the CAD against things like the Aussie and the Kiwi, I think that's particularly pertinent. And actually, I'll have a look at the Euro CAD. We're still in, have been for nearly 5 months now. As I say good day to me buddy. Hello, Ash.
Hello, mate. How are you?
Yeah, look, full of beans, mate. I'm back in the saddle and really missed the charts last week, and looking forward to getting back into it. What's on with oil? I don't know. Has oil moved? Has it, John? I don't really know.
Yeah, I mean, I've just looked at the oil chart actually after seeing what John said. There's not a great deal of movement just yet, but interesting. There was a major pipeline disruption after a ransomware attack in the States, and it doesn't appear that that's back online yet. Now, I think that's mostly gas, but the fact that there has been a disruption in the States, you would have thought would actually potentially push your oil higher, and maybe it will eventually. Maybe it's going to depend on how deeply that disruption ends up being, but it was, it's quite significant. I think I've got the headline. I've got the report here. Colonial Pipeline ships gasoline and jet fuel from the Gulf Coast to Texas, the populous East Coast, through 5,500 miles of pipeline serving 50 million customers. So there is a big problem. I mean, I suppose if you're going to attack anywhere, then Texas is the place to do it. But there has been a report. I can't remember the name of the people that are said to have reported now. Dark somebody, dark line or something like that.
Sounds reliable.
The dark side, criminal group.
Wow.
Yes, yeah. So there's a few kind of undercurrents going on.
They're the perpetrators, not the.
They're the
reporters.
perpetrators.
Oh,
Yes,
yeah. I thought they were reporting it. But, okay, fair
enough.
No,
yeah. So they are, as you say, they're the perpetrators, and as I say, there's some really interesting undercurrents going on in the market today. Ethereum popped up over 4,000 now. Ethereum, Dogecoin, I think had some, or Dogecoin had a bit of fluctuation after Elon Musk kind of came out and was on a show kind of talking about it, and I think he kind of talked it down a bit, but then he said he would accept Dogecoin as a form of payment on his SpaceX program, and I think it's kind of stabilized again. But we are seeing a push for the cryptocurrencies, but it does kind of put the crypto space back in the probably the crosshairs of the SEC and in the States, and it's a difficult one because I'll show you a couple of charts, mate, if you like.
Sure, we're not trading the pound breakout today for obvious reasons. So yeah, go hard.
Yeah, well, let's have a look at.
I found it very difficult to get a line through my normal procedure this week because I've just been through that actually, and there was nothing there I felt was tradeworthy. I do have a few ranges that I'm looking at though, and I think they'll be interesting. We'll get to them.
Yeah, later. Well, you know what? This is where I really like the kind of like no leverage kind of scenario, and everybody knows that that I put in the broadcast group about trading the Aussie Yen to the downside, which everybody would have got stopped out on, but it's a difficult one, and maybe we need a lesson on this aside from this, because I'm holding on to the Aussie Yen, but I'm using no leverage, and this is the thing. I don't really care how high it goes here. I'm quite happy for it to go up to this point, because my view on the Aussie Yen is at some point this parabolic move will reverse. Now I just want to show everybody something.
I agree with you, and if Gordon Scott's right, it'll go a long way.
Yes. Now, I can't. Let me just see if I can bring this onto a different screen. And this is really something that everybody should be aware of. Here we go. JPY. I'm just going to see if I can bring this onto a different chart and show you a bit more history, because I don't like the fact that that we can't look at this properly. Here we go. Let's bring this onto here and get rid of some of these. Oh, now what are all these? Let's get rid of these. Okay. Let's look at this on a weekly time frame is absolutely fine here. Okay, let's go back to, in fact, yeah, let's go back to this area here. Okay, so there is a parabolic move here, if you like. I'll make this a little bit bigger. This one here, big rally, eventually retest the breakout point. Comes a slightly lower, but eventually test the breakout point. There's the breakout level there. Big move. Now we'll mark this one off, because obviously the argument would be here, well, it didn't test the breakout point, and that would be absolutely right. There's the next breakout level that it tests. There's the next breakout level there that it comes back and tests. So we have actually got one. There's the next breakout level there. It does test there. There's one there. Big parabolic move. It comes back down and tests. Actually, I'm going to leave this this other one in the market, which was here somewhere. Let's just go back and make sure that's right. Yeah, that's right.
David, Ash will have a look at gold very shortly, mate. I'm sure.
Yeah, I will check. I'll check gold, and I will check. I will check gold, and I will check Bitcoin as well. Right, look at this. Okay, eventually it comes back and it tests. Took a long time, but it did come back and it tests. So that was the one that it didn't initially test. So let's delete that one. What was the next one? Here's another one here. Breakout point there, eventually comes back and it tests. Now these are on weekly time frames. Tests there, comes back and sees it there, comes back and sees it here. And the point is here, from all the data that we have, there's the breakout level there. Okay, you could maybe suggest it's tested there, so we'll go to that one. So we'll say that 80.95 has as yet not been tested. Now, from all the data we've just looked at, why can't I bring this in? And that's back from 2000, so 20 years of chart data. Everybody, and I'll do this provocatively. How many times did it not come back and retest the breakout point? And I'm quite happy to answer it. 0%. It's never done it in the last 20 years of data. And you could look at any chart pretty much, and you'll struggle to find many charts that don't eventually come back and test an area, which is why, go on, mate.
Sorry, I've got a favourite saying, and it was a mantra. You know how when you want to learn something, you use acronyms. I can't think of one off the top of my head, to be honest. But what's that dog thing? Something fell over the lazy dog or something when you're trying to type.
Oh, I don't know that
stuff
one.
Like that. Quick brown fox and all those sorts of things.
Yeah.
My favourite saying has always been that support always becomes resistance, and resistance always becomes support. And I add to that, not sometimes, not frequently, not precariously, but always. Yeah. It's always the case. When and I'm not talking about stock markets, I'm talking about currency, because currency, as we should all know, has this tendency to revert to the mean. Yeah. And that this will always be the case. It always has been the case until we go into areas of cryptocurrencies under the current currency that we use. This will always be the case. Yeah.
Well, this is really going to bring me on to my next point, mate. And I'm glad you brought up the cryptocurrency. And this is just, with currencies, it's a lot better, as you say, because the thing with currencies is that they are obviously much more liquid, and for that reason they're much more predictable. The fact that the crypto market is so illiquid right now makes it, relatively speaking, makes it a lot harder to predict. And you'll see kind of like things like, I know GameStop isn't a cryptocurrency, but things that don't have that liquidity means that they can just kind of like rocket to the upside and appear that they'll never ever come back. And maybe we've just found something that doesn't do it, in cryptocurrencies. But just back to this Aussie yen, I don't really care how high this go. If I don't use leverage, I know at some point it is coming here. It could take me months, it could take me years. But if I don't use leverage, okay, the swaps might become problematic. Of course, that might be one aspect of this which is difficult. So you will need to kind of like have some element of timing where you say, okay, I'm not just going to sell everything and buy everything without any kind of caution. I'm going to need to understand that eventually the swaps can really batter me, and the margin will eventually kind of get eaten away that way. So you've got to be wise with it, and you've got to hedge out some of the risk of those margins with other trades. But eventually this will come back, and I suppose I've got a general view of the stock market that it's becoming a bit of a bubble. Now, if we bring in the cryptocurrency space and what's going on here, this just isn't sustainable. It can't happen. Everybody thought and said the same thing when this rocketed to the upside. This time it's different. This time we've got something that doesn't come back and test, and it's just going to go and go and go, and doesn't look anywhere near as vicious now. You see this, but at the time there was a lot of people just in absolute panic when this was going on. So this just isn't sustainable. This will come back, and eventually it's going to come back and probably be around about the 1100 mark. I'm guessing. I don't know when. It could be 10 years from now. It might be 20 years from now. And the question is, do you see Ethereum as a use case forever? Now, if you look at Bitcoin, which is much more liquid than Ethereum, then this one has, to a degree, it has had those moments. And what you'll find is that the more liquid something becomes, the more the more participation that something has, the more predictable, if you like, the moves eventually become. They don't just go in big waves in one direction before they start to turn. Now, when it comes down to Bitcoin and it comes down and Ethereum and all the other cryptocurrencies, the reason it could be different and the reason it is difficult is that a lot of them don't have a use case. Now, if you think about the Aussie versus the Yen, there is a use case, and at some point, the Australian dollar will become uncomfortably expensive for the Australian government and the country. So inevitably, it cannot continue to strengthen. There's just no way. Otherwise, they become less competitive. People stop buying goods in the same volume from that particular region, and then of course the currency will weaken. But there is still a lot of demand for the Australian currency right now, while the world is in this expansion phase. But the expansion will inevitably,
and in trade in particular, mate. The iron ore price is ridiculous at the moment.
Yeah.
And of course, China are buying it up like there's no tomorrow. Which of course puts a lot of money into the government coffers, which enables them to pay back debt that they've incurred over COVID. And whilst that's the case, it'll only be short term. Exactly the chart you're looking at. It's not sustainable.
Yeah.
Because the instant that China said, well, okay, we've got enough iron ore for now, everything goes back and spirals back in the opposite direction. So, the Aussie is a little bit on the inflated side at the moment because of that price, I believe.
Yeah. And I suppose this is that. Yeah, I agree with you, mate. And this is the thing about trading. Now, if anybody is an investor, and everybody's got a different approach to the way they trade. But what I try and do is try and put my investor's hat on rather than my trader's hat when I sit at the market. The benefit of trading over investment is firstly the cost should be less depending on how long you hold it. Obviously, eventually it can increase if you hold positions for too long, but the cost should be less. But the main thing is that that there is no tax to pay. Certainly in the UK, we don't pay tax on trading profits. So if I am looking at this as an investor rather than a trader, as long as I have a general belief of the direction of something, then I'm quite happy to hold. And as you and Shukri both sort of like say about hodling, I'm hodling at the minute. I'm hodling the Aussie Yen, and I'm quite happy to put and I would do that with shares. If a share price came down sufficient, let's say 20%, and I still believed in its use case, then why would I get rid of it? Because what I'm suggesting is that eventually it's going to come back to where I got in, or potentially even higher than where I got in. So I'm always trying to pick something. My first point of call is to try and pick something which has an overall, which would overall justify or satisfy my particular view. And I do think that the stock market is frothy. Now, the timing of it looks like it's off. Look at the VIX dropping down yet again, and it's had a few hints that the VIX may start to rise. We had this engulfing bar on what looks like it would have been, if that's Friday, Thursday, Wednesday. It looks like Tuesday there was this engulfing bar to the upside on the VIX, but then we followed it with this engulfing bar on Friday. So that data out of the US actually has moved things pretty sufficiently. It appears to have helped with the Ethereum move, possibly. It's certainly helped with the VIX moving to the downside. It's definitely helped with more interest in the Aussie dollar. Looks like the S&P also. Look at this engulfing bar on the S&P to the upside, right at the top end so far of where we are on the S&P. This is certainly, this is starting to look like a blowout top. Now, I don't know when that blowout top will eventually turn, but eventually it will turn. And again, you could go back, you're saying not sure about indices. Well, we could do the same thing with indices, where we go back and say, through the course of the last 10 years, let's say, does price come back? Well, eventually it did there. Look how parabolic that one was. It just went up and up and up, but eventually it comes back and tests that point. Same thing happens here. Same thing happens at that breakout. This breakout here. Ooh, just about test that one. So that was okay in the end. Same thing happens here. Same thing happens here. Looks like I'm just trying to pick the next parabolic move. This is the next one really, and eventually it does come back and test, and that's the pandemic. So eventually there will be something that drives it down here. Now I don't know what it is, but the market just does not go in one direction without coming and having a look at where it's come from. So it will happen, mate. It will happen, and I just don't know when. So I'm sticking with that. As I say, that the timing doesn't look good. Let's have a look at gold, because that was also moved on Friday because of the jobs data. Gold has to get through this level. We're very, very close to it now. But this is the next big. If it takes back 1870, then I would suggest that gold's move to the upside is really on its way. Now, buying in here, in my opinion, would be way too dangerous and way too late. Really, if you wanted to start building a position with gold, it should have been down in this area here. Now, I've invested in gold. I'm not trading gold, but I have invested in gold, and the reason that I've invested in it is because of the dividend that I can get by investing in gold. But I kept some money back. I'm not fully done on gold, because I've kept some money back to try and get in at 15 again. But I don't know whether that's going to come back now. And certainly with the way things are going, if the stock market does start to collapse, and the Aussie starts to collapse, that would suggest that the risk off instruments like gold and the yen would probably get some kind of boost. So I'm quite happy to hold on to gold. It's the same as silver. I've got some silver in an investment, and that's started to move to the upside. Bit better than gold in some respects, because it never really broke down a low. The trend didn't really change with silver on this weekly chart. You could maybe argue here there was a lower high here, lower low there, and lower high there. But I don't think I'd go with that. I think the pattern here is the high. There was the low down there, and we didn't break that low sufficiently. Then we get this bar here, and silver started to move back to the upside. So silver looks better to me in many respects than gold, and they're both likely to move to the upside. So it depends on what you prefer. But let's bring in the gold silver ratio as well. So gold currently sitting at 1835, isn't it? I'll do 1835, and silver is sitting at 2770. 2775. So the ratio is at 66, which is getting close. But if that starts to bump up to around about 75 on the gold silver ratio, that would suggest that that it would be better to go and buy go and buy silver. It would suggest that that silver is undervalued. But right now it's kind of sitting in the sitting between the band of about 40 and 75. So both gold and silver look good at this particular stage. Silver's much more likely to have a better percentage move just because of the lower price. And again, it's about liquidity. There's less liquidity in silver than there is in gold. But I would suggest that silver, having not got back to its prior high up here at 50, has got a chance of doubling in value. If you look at gold in the same way, gold is already taken out and giving us a new high, and the move to its back up to its high is a lot more recent, and it's nowhere near as high. That's going to be about another 10. About another 11% move to the upside, 12% move to the upside, where silver could actually double in price. It could go up 100%. So I'm looking at both gold and silver for that. Now, let's have a quick look at the week and see if there.
Do you have an opinion on the hourly chart on gold, mate?
Let's have a look, mate.
I know you're not trading it, but that was the question from David. So
okay.
Let's address that.
I didn't see the question. Is that on YouTube? Is it?
No, it's in chat.
Is it?
Mm-hmm.
Why have I not got chat? I've got John.
I don't know, buddy.
Let me just close chat down and start it up again.
Hi, Paresh. Sorry, late giving you a shout out there.
Do you know what, Jeff? Also, I haven't got you on screen, and I've got a hand up from you. Let me lower that.
Oh, hang on. I'll put my hand down and put my picture up. There you go.
Oh, that's okay. Oh, okay. I don't know what's going on. So you've got questions in the chat, and I haven't. Okay, I don't know why that is. All right, you might have to relay those if they come in. So it's about the hourly.
John's saying go to oh, sorry. He's saying my eyes. This is David from David. He's on the hourly chart on gold, and I think he's looking for a short. Maybe I'm not sure. Did he say that?
No,
he didn't say. He didn't say.
Okay. I kind of get it. I mean, I would understand that. We are at getting close to a resistance level. Catalyst wise, there's no reason to short gold. The numbers that we have seen from the States would suggest further upside, for anything that is trading against the dollar right now. So I'm not sure whether I'd be too keen on shorting gold. Which would lead us to go, okay, well, where can we get in long? So we just got to pick out some levels. Now, if we think about the same philosophy or theory with how things test, it would suggest at some point this area is going to get seen. So it would say that sometime somewhere around about the 1800 level, let's say 1830 now, 1833. If it comes back to 1800, that looks like a really interesting level. Now there's already confluence just on the price points here. You've got a trend line, and you've got a breakout point. If there's a fib there as well, which there's a 50% retracement on the fib, then you've got 3 points of contact right there. Now, I haven't got the pivots on, so let's bring those in as well. So 1800, there's no pivot there. That would be my target. That's where I'd be sort of saying I don't want to get into gold until 1800. I wouldn't want to short it, even though by what I'm saying, it would suggest that it comes down to this point. I'm not comfortable shorting it because it looks pretty bullish to me. But I think if it can come down here, and what this may suggest is that it might be the wrong week to try and get into here. There's no daily pivot in this area, and there's no weekly pivot in this area. But over the next 2 weeks, if this comes down to this point, then it starts to become interesting. Now, what I might do as well is just have a quick look at the seasonal and COT data and see what that is suggesting. Oh, it's take me a little while just to get this up, but let's see when it's suggesting that gold could actually pop and break to the upside, because all we've really got is a rally within a pattern. What we don't yet have is an absolute breakout and say, okay, trend confirmed, let's get going. Okay, where are we at? Here we go. Right, so this is our COT and seasonality report with gold. And what I did see, which was interesting, because obviously this is COT data which is reported by the companies on Tuesday but released to the market on Friday, which means that the move that we saw, which was on Friday, would not be in this data. And if you look at the top here, the commercials percent change, these are the longs and the shorts. So the longs on the left column, shorts on the right column. So we're looking down in this column here. And what we see here, gold, longs to the left column on the commercials, 0% change. They haven't really gone long. They've cut a little bit of their short position, -2%. So they're not as short as they were. They're not as bearish as they were. But they haven't really added to their longs. This is where it does start to get interesting. So let's bring in the numbers here with gold and what we've got on the index on the short term here is a buy signal on the short term. So really that you can see that they started to build into their positions here on the short term, and it did bottom out there. Now, if we look at how successful this is, you see that's when it touched the 100% line, and we did get a rally up there. That's when it touched the 0% line, and we have had a downward move there. Now, I will be able to find some that just didn't work out, because that's just the way that COT data is. There we go. That's a rally. There's a move down. Didn't touch it there. Didn't touch it there. There's the rally, and look what happened. It moved down, but the index stayed at 100%, and eventually it did come into play. There's the 0. And market moves up, but it stays at 0, and it does ease down. But I would say that was probably a genuine loss there, because you'd probably be selling at this. Actually, no, you'd probably break even. That's not too bad. There's the rally point. Sorry, no, there's the sell. Now this one is a big loss, because they're still selling here, so they would have sold, suggesting selling here. Now price hasn't come back to that point, so there'd be no way to get out of that position. That one would have made money. Oh, thank you, Arcats. Thank you very much, buddy. Hey, Joe. Hey, Scalper Joe. How you doing, man? And Paresh, I am now seeing. Okay, I've got some.
You're back in the game, buddy.
No, because I still haven't got. Whose question was it on the hourly? I can't remember.
That was David.
David's. Sorry, I still haven't got David's question in there, but you can just relay them to me if you can, mate. Here's the rally, and there's the rally. So we are seeing that more often than not, this does indicate what's about to happen. Now this is up high, and it's just crept up a little bit more as well. So this would be due to that kind of 2% move to the downside, -2% move to the downside with the shorts, and we've started to see this move up. But there's a slight lack of conviction when you see a change here of this little amount, very small amount change there. That would suggest that the commercials are not 100% confident that. Not necessarily that gold won't break out, but the timing isn't quite right. Now let's have a look at the seasonals and see what the seasonal pattern suggests on gold. And what we see here is throughout May, it's quite flat. It does tend to be quite flat. We get a little dip back down in June, a little rally at the start of June, dip back down again in June without it being anything significant, but then we start to move. So it looks like a mid-June low is the time that we should be looking for signals with gold. Now that doesn't mean this is going to happen. That doesn't mean that the seasonality is going to work out. And somebody said last week that seasonality has been all put out of skew with the pandemic. And I have to say that there's an element of truth in that. Not everything. I've seen some seasonality still working out, but I do think
I think that was definitely the case early days of the pandemic. Yeah. Definitely the case, because the market went into shit. What happens next?
Yeah, and the other thing that I'm finding really interesting with this stuff, mate, is that if we look at the data on let's bring this in here. Going to bring in just simply on Forex Factory. We're not going to look at it deeply. We're just going to look at the headline data. Where I'm finding this start to get quite interesting is that inevitably we were going to have a parabolic move in recovery with data back to the upside again, because it was starting at such a low point, but this is just one example of a number that I'm finding interesting and trying to figure out how's best to read it, because one thing that I like to do when I look at if I'm trading shares is that I like to see not if a company's growing, but is the rate of growth continuing from the previous year, or is it starting to slow down? You know, what's the actual rate? Now the ISM services PMI here, when we had that big drop, of course, when we were going to recover, the rate of change was going to be huge. And we did see sort of like, it bubbling along quite nicely. Then we got this big pop to the upside in April. But this has just eased a little bit. Now, it's still a huge number to the upside. So there's still recovery going on. But is the recovery, and this is the big question, is the recovery slowing down somewhat? One number doesn't tell us anything. But there is just a little bit of I would have thought just a little bit of concern there with that one number. Now, if I bring in the next ISM number, which is to do with manufacturing, then what we see. Where's my manufacturer? Oh, do you know why? It's because Forex Factory don't give it any kind of credence, and they color it yellow. Here we go. Oh, sorry, they color it orange. Now this is the manufacturing PMIs, and again, massive moves. Of course, big trend to the upside, but from 65 down to 60. That's quite a big drop in expansion. So it's not that the US economy isn't expanding, but it's not expanding at the same pace. So there's a couple of red flags there. That's all they are. Nothing huge, but there are a couple of red flags. And then we go to Friday's data point, which has really spooked the market. And it is this non-farm employment change. And I'm not sure if I can get this to be. I don't like the way this has been. It's hard to see, actually. Hard to see on this. Let's just get rid of the forecast. It might be a little bit easier. It's a little bit easier without the forecast there. But you can see that that the employment change has also taken a big dip. Now it's little things like this that you start to go, okay, well, maybe the massive expansive move that we've had in growth is just subsiding just somewhat, which means that we might just get back to some kind of normality. Now, that isn't a problem in itself. But then when you consider that the US has got astronomical amounts of debt, and they're not the only country in the world, as we know, but they've got astronomical amounts of debt to GDP. I believe over 100% of GDP now is in debt. Now that's uncomfortably high. That's probably understating it, actually, isn't it, mate? To say it's uncomfortably high.
Understating it, yes.
If you're a household and you have got a job and your partner's got a job, or whoever else, there's somebody else in the house with a job, and you're earning 50,000 between you every year after taxes, you end up with 50,000, but your expenses are 51,000, and then all of a sudden you find that the car's engine's faulty, so your expenses are about to go up. So not only are you £1,000 or $1,000 down a year, because your expenses were already 51,000 and your wages were only 50. Now you've got an expense to come out. Now, it's this kind of thing that you don't want to see, and that's just kind of illustrating what's happening with a lack of expansion. In fact, it's probably better to say you get a pay cut. You get a slight pay cut down to 49,000. Now that deficit is starting to increase. Now that is concerning. That's a concerning metric.
It doesn't matter what it is. It can be any bump in the road, which makes it more scary because there are a lot of bumps in the road, you know.
Yeah, exactly. And I suppose that's my point, is that can the US and all these other countries sustain anything else? You know, we've had a huge shock to the system, and the answer has been to print money. Now, printing money is absolutely fine, because what they're hoping to do is inflate away the debt. But actually, you know, inflation data is picking up, but it's maybe not the way that they would be comfortable with. And what happens if they it goes into hyperinflation? Then there's a whole host of other problems that kind of comes out. And inflation data is picking up. You know, I'm starting to look across the board, and I don't think there was one country that I looked at. There might have been one actually, but I can't remember which one it was, that didn't have inflation that you know, really fairly significantly popped to the upside. Now we've already seen. You mentioned iron ore, mate. We've already seen oil starting to overinflate in some respects. You know, it's continuing to move to the upside. We get this little shockwave going on in Texas with this criminal company, and it's little things like that that can just add to the problem. And I think when I looked at the inflation data the other day, it was really about food. Food seemed to be pretty overinflated in comparison to most other things. And what do you need? Well, you need food. You know, you can't have commodities like that overinflating. You know, it's one of those things with oil. There are alternatives. You know, there's an alternative to not use so much energy, but there's no alternative to not eating.
Well, you've never heard of a liquid lunch, mate, or what?
Because that is the one alternative. I forgot.
Just kidding.
Yeah. Printing money is fun. Yeah, I guess it is. I mean, it's, you know, it's a way, it's an answer, but hold on a minute. Oh yeah, it's an answer, but I don't think it's not going to be sustainable. And the problem gets kicked down the road. My concern is that, you know, while we kind of go in with this kind of move with Ethereum, we go with this kind of move, if you like, with the Aussie Yen still popping up. We go with this kind of move in the S&P 500 still popping up. All these things kind of, you know, rolling and rocketing to the upside without any kind of retracement. My concern is the overconfidence in the market. You know, that there are a lot of people, and cryptocurrency is probably the best example. There are a lot of people that as yet have not been burnt sufficiently by the stock market, and I'm not going to call them stupid or idiotic traders or anything like that, because it's just a lack of experience. And I don't say that, and I'm not trying to sound what's the word?
I don't know.
You know, when you talk down to somebody.
Oh yeah, that word.
Yeah. Uh,
I know the word, but yeah, it's not coming to me either.
yeah. Well, I'm not trying to sort of like say, you know, I'm up here, and I'm not trying to sort of say it from a sedentary position, and you're down there. I guess what I'm saying is that I've been there. I have been there, so I know what it's like, and I know what it's like when you first get in. You pick stuff, you buy cryptocurrencies, or you buy stocks, and all they do is go up.
That's the one, John.
What did he say?
Condescending.
Condescending, that's the word, exactly. See, I can't see the chat. I don't want to sound condescending. I can see the chat, but it's not printing new questions and comments. I don't want to sound condescending because I've been there, so I know what it's like. But there are many people that haven't yet been burnt by the stock market, and they think that they're actually clever because everything they're buying is going up. But I think Gordon Scott said it yesterday. You don't want to confuse intelligence with a bull market. It might not have been him, actually. It might have been something I read. Yeah, you don't want to confuse.
No, I think he did say that. Yeah.
He did say that. Yeah, you don't want to confuse intelligence with a bull market, because everything you pick is going to go up. Everything you pick is going to make money, but the market just doesn't always go in the one direction. And when it comes down hard. And the problem is, if you can't recognize the difference between a pullback and a change in trend, then what you end up doing is panicking on the pullback and pulling out of your positions and not making the money, or buying into the dip when it's actually a genuine change of direction. Now, recognizing that is not the real trick. The real trick is controlling your risk, because if you control your risk, it won't matter what happens. And that's my point with leverage, really. Why is the yen so weak? Sorry, mate, what were you going to say?
Yeah, no, I've got a favourite saying along those lines, actually, and it goes something like, and I have added to it over the time. It goes something like, when your ego is having a bad day, your soul is having a good day.
Yeah.
And generally so is your bank account.
Yeah, that's true, mate. That is very, very true. And you know, I've had. Do you know where my year has been bad? And in some respects, I quite like this. Where my year has been bad is that I've cut my positions that I've had too early. Now, when I consider the balance of what's worse, to cut your positions too early or be in something that you shouldn't be in anymore. And I when I sit here frustrated that I've cut out of something which is still going up, I'm also sitting here thinking, but I'm not losing anything. My money's protected, so I'm okay. You know, actually, all I'm doing is squirreling stuff away, because it's difficult when you perceive there will be a market turn coming, when the market keeps going up, and you could have squeezed out that extra few weeks or few months, but you know, that's just the nature of the beast. It's very, very difficult, if not impossible, to time the absolute turns.
Yeah, it's absolutely, it is impossible. I mean, what are you, a crystal ball? You can't do it. I mean, there's support and resistance, and then there's the next level of support and resistance, and then there's another one, and then there's a fundamental announcement that takes place.
Yeah,
you know, it's just not on. You can't do it.
Yeah.
And you know, as soon as you start, and it's a very good trigger to get out, I can assure you. When you start saying, "Gee, I hope it just goes that little bit further," or "I wish it would do this," or "God make it do that," or you know, whoever. As soon as you start saying that, just press the exit button.
Yeah,
because you're going to go through a terrible time.
Yeah, I agree, mate. The yen is having a terrible time right now, John. I'm seeing Jaira's comment is coming in. It's 14th of May going to be dip, retracement, or crash? That's the $1 million question, isn't it, Jaira?
Well, that's the second $1 million question. The first is it going to do anything?
Is it going to do anything? Yeah, it might not do anything. 14th of May is the date that Gordon's picked out. And his theory and his reasoning for that particular date is sound. It's really, really sound.
It makes sense.
It makes complete sense. But it might not happen, because, you know, as Jeff says, none of us have got a crystal ball. All you can do is kind of look at historic data and say, well, the historic data suggests that this will happen. But you know, inevitably, new history is made at some point. You know, historic data suggested that the Romans would never lose a battle. or a war, let's say, not a battle, because they did lose quite a few battles, but they ended up winning all the wars. But at some point, history rewrites itself and they end up losing. Historic data would suggest that that the US dollar will remain the largest economy, but that's probably going to change too. Yeah, oh, Gyro, you don't attend Gordon's show, but everybody's talking about the 14th of May. The only reason I'm talking about the 14th of May is because Gordon is. That's the only reason. It's not my theory. It's not my belief. I haven't done enough kind of research on it to say that I've got the belief that the 14th of May. All I've got is a overall view of what's going on with the stock market and global economies, and saying they are frothy. And I'm listening to Jerome Powell, and I'm listening to Janet Yellen, and I've just got these little things going on in the back of my mind going, well, the Fed's saying it's frothy. The PE is frothy. The PE is over 35, I think, right now on the S&P. That historically is frothy. It's bubble kind of territory. So I'm looking at that stuff. And all I'm saying is that I think the market is just a bit overcooked, but I haven't got a date. It could happen in October the 14th, for all I know. But Gordon has actually done a specific time frame analysis of it, and he's come up with the 14th of May. So therefore, I'm happy to go with him on the time, because I believe it's coming down at some point, but I just don't know when.
Yeah, look, and my approach to that is I know absolutely nothing about it, so I'll defer to the expert, and he's got the runs on the board. So why wouldn't I listen to that? My approach to it is everything I see now that is breaching resistance or support, if he's correct, is going to be a false or a fake out. That's what I'm looking for. And it'll only be currencies for me, because I know nothing about anything else. So in the case of Aussie Yen, I'll be looking for that to breach resistance. Then I'll be looking to place orders underneath that breach. In the case of US dollar versus probably the Aussie, probably the Kiwi, probably the Cad even, but I'm a little bit on the doubtful side about the Cad because of oil and its tendency to remain buoyant based on oil. So that's going to be my approach. So I'll be looking for things that are breaching resistance not on a daily time frame, not even on a maybe a weekly time frame, but most specifically on monthly and weekly time frames, because they're the ones that are telling me whether we're going to get bull traps, bear traps, or any traps at all. If they're breaching now, they're breaching for a reason, in my humble opinion, and they could very well be traps. So that's what I'll be looking for. But then you know what I'm like, I'm looking for contrarians all the time.
How will the UX stock market? So just a quick comment on the yen, and this will bring us into to your question, Gyra, as well. How will the US stock market affect non-dollar pairs? So firstly, let's consider the yen. I've looked at the data on the yen and Japan, and it's not great. It's okay. It just bubbles along in the background, really. The only real reason I can find, or the main reason I can find people to go and buy the yen, is because it's a safe haven. I don't think it's got much more than that, really. Okay, the trade balance is good with the yen, and that's why it is a safe haven. But aside from that, their numbers aren't particularly stellar. Japan isn't coming into a new age of growth anytime soon to outstrip every other country. So we should go and buy the yen. It's not a particularly good currency for that particular reason. But if there is a move to the downside with stocks and with the other risk on currencies, then the yen's the obvious place to put the money. So I don't think it's going to be deep. Now, on the correction, is it a correction? Is it a crash or whatever else? In my opinion, it's a correction. And the reason I'd say that is that it's frothy up here, but the numbers are good. You just saw those ISM numbers. They're at 60 plus, which means that there is growth in the US. And if there's growth in the US, in the same way that when the US sneezes, everybody else catches a cold. When the US smiles, everyone else has a party. and it is one of those things that right now that the US is doing well. It's just that it's just a bit overvalued here. So I think it's going to be more of a correction than a crash. I think we just buy the dip personally, but let the dip be relatively deep. That would be good. If we can get a I don't know, 20% correction, that'd be fantastic. And then we can buy in from that point. Now, how the US stock market will affect the non-dollar pairs is just considering which pairs are growth and which pairs are contraction, if you like, or which are risk on, which are risk off. Risk on, the Aussie, the Cad because of the oil connection. Risk off, the Yen, the Swissy. So you can put those four straight away into a basket and say, well, if the stock market crashes, the Yen and the Swissy are likely to do well, likely, not definitely, but likely to do well. And the Aussie, the Kiwi, and the Cad are likely to do poorly. So you can,
you've got to throw the greenback in there as well, because traditionally,
yes,
you've got to say, and it's very hard for me to say it because I think it's a dog of a currency till the end of time now, in my humble opinion. But people will flock to it. There's no question in my mind that will be the case. The dollar will rally against those aforementioned currencies, which are risk on rather. That's exactly what I said, 5 minutes ago. That's exactly where I'll be concentrating my preparation, if you like, if indeed I see an opportunity. If I don't, then I'll just let it happen, or not. Whichever way it is, I'll just go back to normal. So I think it's worth prepping for. I think it's worth noticing that those risk-on currencies are rallying at present and potentially going through a resistance level. But to you, I don't know that that's sustainable. I really don't.
Yeah, do you know what I find interesting about the dollar as well is that the dollar is both risk on and risk off. It's one of those currencies that is a bit like a chameleon. And it's going to be dependent on what's driving the move down, as to whether I will be looking at the dollar as a risk on or risk off at that particular time. So it's going to be knowing what the catalyst is going to be important with this stuff.
Yeah, I'll be pretty surprised if the stock market corrects 20% that the US dollar doesn't rally. I'll be pretty surprised.
Yeah, and actually, that might even be the cause of the correction. Maybe the dollar does rally, and that's because that's another reason that obviously it becomes frothy, is that the home currency becomes more highly valued. So they can have a bit of an offsetting effect.
Of course, the burning question is, are we, and let's go back to the last major correction, if you like, which was global financial crisis. Are we in a similar position this time round? That's probably worth researching. I'm not going to make the statement that we are or we aren't, because I don't know, frankly. To me, it seems a little bit different because we're now prepared for it, whereas the GFC we weren't. I mean, the smarties probably were thinking that, that the bank shouldn't be loaning money to people who can't afford to pay it back, but the circumstances are a little bit different. Will the result be the same? I think it's probably worth going back to 2008 and having a little bit of a look as to what happened when and what resulted. That's kind of going to, if I get time, I'll be doing that through the week as well.
Do you know, mate? What's interesting about what you've just said as well is that there is a new sheriff in town when it comes down to the financial markets. Maybe it's not a sheriff actually. Maybe the sheriff remains to be the banks, but there's certainly a new gang in town challenging that sheriff with blockchain. Yep. Now blockchain is in play and it's gathering momentum, and the institutes are now involved in blockchain. Then what happens to the banks? There are many banks that don't have a successful investment arm, and they are still, the retail banks, they're still there for kind of like the everyday person. Well, with blockchain technology kind of like starting to come in, Ethereum 2.0 coming in, and we've already seen what's happened with Cardano over in Africa. and Polkadot as well. You know, you've got the blockchain technology which is gathering pace and gathering financial backing. What ends up happening to the current financial system? You know, there may well be, and it's always difficult to imagine, but we might well be, as I've said for the last year, and you've said it as well, we might well be actually living through the big change, the biggest change that we've had in history for what could be 50 years. You know,
without question, we needed to recalibrate. And if this is the recalibration, we're talking about as though it's already happened, but I don't have a crystal ball, so I'm not predicting this in any way, shape, or form. But I'm suggesting that it's a possibility. And would I be surprised if on Monday the 17th we wake up and suddenly we're in a different world where we can only use Bitcoin to trade with? Yes, I would be completely surprised. That's not going to happen. But it may be a practice run. It may well be a practice run for what's to come. I don't know.
Yeah.
As I said, it's yet to happen. So we're really talking ahead of ourselves. But
yeah,
does it hurt to have a plan? Certainly not. Definitely not. David, sorry, mate. I'll just answer David's question the best I can.
Yeah.
How would I position size with a $100 account, a £100 account? The same as I would with a £1 million account.
Do you know what? There's a point with that I was going to make, and I mean this just to kind of like put some responsibility, sort of like from my perspective. I think it'd be irresponsible of me not to say this to you, even though it's not going to be what you want to hear. It's impossible, mate. You can't do it with £100 account, and the reason for that is that you can't trade 1p. You would literally need to take your risk of the pip size down so low that you can't cover it. You won't be able to cover it with £100 account. Even the fees on. I don't think there's one share that I can trade on the broker that I use that you can't use less than £1 per pip or point, which means on £100 account you can't cover your risk. You know, if you've got even a 10, let's say you've got a 10 pip move and you have to put on £1, you've already wiped out 10% of your account on one trade. So I don't think it's possible, mate. I mean, I know what you're saying, Jeff. Your approach, no matter how big the account, should be exactly the same. But that is actually too small. I don't think you can trade on a £100 account personally, unless you can find some. In fact, Capital.com might allow you to do it. You might be able to trade penny by penny. So first thing I would be doing is looking for a broker where you can trade 1 penny per pip. And if you can find that, then you're okay. But I'm not sure if they're out there, and Capital.com might be, but I'm not sure, mate. But that's the first thing you need to do. But if you're losing £10, it's on a trade. If you're risking £10 on a trade, you can only really risk a pound on that on each trade. And I'm not sure whether there are brokers that offer that, but I might be wrong.
Wow, that's a very deep quote from Lord of the Rings. I'm going to have to consume that over a period of time.
What is it?
It is, and then in the end, one digital fiat to rule them all, one digital fiat to bring them all, and in darkness bind them all.
Yeah, I quite like that. One digital fiat to rule them all, which, I mean, you have to say it'll have to be the dollar. At this stage, it'll be the digital dollar, right?
Oh.
Well, it's the only.
I struggle with that.
It's a fiat currency. It can't be the euro.
Yeah, wait a few years.
You like the euro, do you?
No, but there's something on the other side of the world that would probably come into
Oh,
play there.
China.
Mm.
I don't think China would want it, mate. I don't think they want that mantle. I think they quite like the fact that they can peg to the dollar rather than have to be the reserve currency.
Yeah, we'll see. Yep.
Anyway, mate, we better wrap it up. Otherwise, we're going to be in danger of going into tomorrow.
Well, there you go. I hope we can come back and place our trades. That'll be good.
Yeah, there's
I
nothing
better
really today.
very quickly. Very. I need to update a few things because I haven't done it for like 2 weeks. So I'll just very briefly do that. The trades that I was in last time I was with you guys, I think prior to last Thursday. We've still got a few in the market, but on Thursday or Friday, and I need to explain this to you guys who haven't been following and don't know how I actually trade the market. This is how it works. Was it Thursday? Must have been Thursday. I don't know. It was in the Telegram group at some stage. We traded euro pound long, and our TP1 was 86.75 from memory, which is in here somewhere. What you must do, guys, when you see me put these numbers up, is when you hit TP1, you've got to take 50% off the table and move your stop loss, whatever that is. From 86.57 to 86.75 is what, 18 pips. So you've got to move your stop loss to 18 pips so that exactly this doesn't happen to you, so that you don't hit a resistance level. And this is why we trade the way we do. I trade the way I do. When you hit a resistance level, aka the weekly pivot last week, this is what can happen. So that's why I do what I do. Half off when we hit TP1, move your stop loss to a safe place so you cannot lose on the trade once you've got TP1. So euro pound was exactly in that boat. Dollar yen, we also entered late last week. And I don't know why I haven't got that there. There it is there. We are pretty much on entry at the moment, having hit TP1, so you should be free trading that one as well. Quickly updating pound CAD. We've got our stops in a very safe place. We are well in front there. We need this to turn around, of course. I would consider moving my stop loss above this swing. Let's make a decision on that tomorrow. Pound Swissy, same, coming back at us very quickly. We have got our stops at break even, having taken profit on that as well. Pound's rallying pretty heavily today. I think the only other one we're still in is Aussie Cad. Same story. We've got our stops at entry, having taken profit on that. This is in a good spot, Aussie Cad. I like it. I like it a lot. And I think we can get a good result out of that. Of course, stranger things have happened, but I do see this down around here somewhere. So you've got about another 200 pips, in my opinion, before I'd be looking to take more profit on that. As far as today's concerned, or this week is concerned, looking for Aussie Yen, very keen on Aussie Yen to trade it short. This is what I was talking about before. We are at a resistance level and we are poking our head above that resistance level right now. It has got history. So I'll be looking for a false break here, a fake out, if you like. We've had 1 phase, 2 phase, then a big dip, 3 phase, 4 phase. Are we entering a 5th phase? I don't know. Maybe we are, but this has been going for 1, 2, 3, 4, 5, 6. We're now into our 7th month of bull bars here. So we've been on a tear in a bull market. This doesn't happen often. It has happened once before back here, interestingly off the same level. Am I expecting pullback? Well, where did it go last time it rallied off that level? Well, interesting that we're there now. So I'm expecting a pullback on Aussie Yen, at least a pullback. Kiwi Cad, this also has already come off resistance a couple of months ago, but put in this incredible bar there last month. And I'm looking for that to continue, right? We've got if you like, we've got a left shoulder and a right shoulder here. Got 3 little Indians sitting up there. I think this is headed for lower prices. Getting into the market is very difficult at the moment because we are consolidating quite strongly. Smaller time frames, I think that's Well, there's your range there, right? It's pretty clear. So I think you can trade this off the top and the bottom. It's already come off the top, looking for a lower high here to trade it down to the bottom of that range. Kiwi Yen, same as I mentioned on Aussie Yen. This is poking its head above resistance. I expect this to be a false breakout. So I'll be looking anytime this week to trade this back in this direction. What do I want to see? I want to see price come back underneath here, then retest the level, give me a lower high, and I can look to trade it. That could coincide with this trade line. So that'll be a very, very strong area. Back under here, retest, give me the lower high. I think that would be an excellent entry on Kiwi Yen. So those three pairs, pound and dollar was another one, has already poked its head through the top of this range. If it gets to these highs, gee, I think it's an excellent selling opportunity. But tomorrow, as I said earlier in the show, if this candle is as is, I will place a short order underneath it and I'll put my stop loss above the bar. So that is it, mate. That's me for the week, and that's exactly what I'll be looking for. So
fantastic stuff, mate. All right, brilliant. Okay, nicely done. We'll be back as always tomorrow at 5 to 8. Thank you, everybody, for your participation. It has been a good show.
Hang on, two seconds. Just one quick one. Aussie Cad.
Yep.
Advise again on Aussie Cad. Okay, what I said was it is in a beautiful position right now because it's retesting the breakout level here. We are in consolidation, which makes it tough to trade at the moment, but on the smaller time frames, I think you could safely look to trade it inside the range. So if you got a lower high here, no matter on which chart, even look into the hourlies and the 30-minute charts, this is the hourly coming up. You've already come off the top. So it's tough with the daily pivot until you get back up here somewhere, because you've got to have room to trade to the daily pivot with profit in the bank, or break, retest, give you the lower high, then you can get in. But I think this is an excellent range trade at the moment because it has come off the top and it is bouncing, as I said, off this formal level here. I think this is a really good opportunity to get some more money out of Aussie Cad. So I hope that helps. Sorry, mate.
No problem at all. Yeah, just to thank everybody, and questions for me already for Thursday's quiz. Great stuff. All right. Thursday is quiz day tomorrow. We will have Shukri in the room with us to talk about cryptos and tell us his opinion about the next bull run, which looks like it is possibly going to be starting again on Bitcoin. So we can ask him about that. Thanks as always to you, mate. Thanks as always to Angel as well. Brighton do need one more win. We had a terrible loss the other day. I don't know what Lewis Dunk was thinking, but yeah, one more win or one more loss from Fulham would do, which I think would probably more likely happen. We will see you tomorrow, guys. Thanks as always, and thank you to you, mate.
Cheers, mate. Have a good one, everyone. Bye-bye.